I spoke on a panel discussion which was regarding geopolitical issues around the world and what investors are doing to counter those geopolitical asset trends and investing issues that we have around the world at this point in time. So what's happening on the geopolitical front is that a lot of disturbances or imbalances have happened on supply chain, logistics, inflation, debt levels are going increasingly higher. And that's putting a lot of pressure on countries, corporations, and even in terms of funds. And Asia and emerging markets tends to slightly outperform this because some of the economies there are not export dependent. So whichever are the export dependent economies, let's say like UK, Germany, US, China, will always suffer a lot more in terms of a geopolitical sort of a situational crisis because the export-driven economies tend to interface a lot more with global liquidity and financial capital rather than an inclusive economy. Let's say like India as an example or Japan as an example, which historically was an export power hub but now is very inclusive in context. So I think very interestingly, a lot of the discussions and discourses that I go around the world is niche strategies are picking up a lot more. By niche strategies, I mean, let's not look at the traditional metrics of investing strategies, everyone knows that, but in terms of niche strategies, so within an asset allocation, within a geographical spread, within a strategy for that particular asset, what are the niche areas that you can look into? And that's similar for public equity, for private equity, for venture capital, for real estate, for bonds. Just to give you an example, in the real estate market, many of the corporations are not necessarily looking at commercial and residential. They're looking at convenience stores, how to invest in fuel pumps, how to invest in highway points, right? For example, in public market equity investing, many people are looking at how can I hedge my risk out to countries which I have not much information on, or my currency is hedged out, or it's economically independent and neutral about what my country is going through. Case in point, if somebody has an investing issue or a liquidity problem in US, he would then tend to deploy some funds towards maybe a stable market like India, which is seemingly showcasing higher growth. So that's a very niche strategy. And also what is happening is hedge fund-based activist investing is picking up by funds and institutional investors and even by single family offices like us around the world. So we are looking at a very activist or a very active position towards our positions as well, and trying to be very open with our decision making and trying to be more reactive rather than just more passive. Well, I think the top priority, we can speak for ourselves as a single family office and some of the institutional investors that we know of and work with, is that most of us are trying to control our debt positions, trying to control our leverage. Because in a recessionary economic environment, it does not make sense for the investors to be heavily over-leveraged or heavily on debt and then try to service debt on their investing positions around the world. So we are controlling that. It's not that we don't pick up debt or leverage, but we are controlling that. Secondly, I think we are looking at growing out of our home-based countries. That's a theme trend which is picking up with investors around the world. So if somebody's in China, he's looking at investing a lot more in Japan and Korea. Somebody's in India, he's looking at investing a lot more in the MENA region, which is Middle East and Saudi. If somebody's in US, he's looking to invest a lot more in UK and EU. If somebody's in UK and EU, they're probably looking to invest a lot more towards Middle East. So that's those kind of trends, back and forth trends geopolitically, are getting more and more linked as investors get more understandable about different economic indicators. And one more aspect is about controlling risk. So controlling risk has become so paramount important that you need to be cautious about where you hold what exposure and where are you banking with, where the liquidity issues are, which asset classes seem to be holding well. So I think we are looking at volatility and risk in a different way, considering what has happened with the US regional banking system. Many governments around the world are very concerned with the debt levels, with treasury rates, with interest rates and inflation rates, and central banks are probably a lot more cautious now. And so are the investors, right? I mean, it's not that we've stopped investing, but we are suddenly a lot more cautious with our positions.